Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
And today, we're going to be talking about the IBC think tank. Anthony spent a couple days back in Birmingham, Alabama, attending this annual event. Anthony, can you give our listeners a little idea about what the IBC think tank actually is?
Sure. The IBC think tank is an annual conference put on in Alabama, and it's only people that can come are either certified practitioners in the infinite banking concept, or they can be a guest for 1 year. But after that, you need to become certified. So at this think tank, it's all about the infinite banking concept. And there's other speakers that are there to share ideas. And probably the most important piece is in between those meetings.
Yeah.
Right. Before and after the meetings, really getting a chance to talk with your peers. But really let's take a quick step back and talk about the Nelson Nash Institute. When Nelson wrote his book, Becoming Your Own Banker, in the year 2000. If you haven't read it, I highly encourage you to check it out. We will put a link in the show notes for you to buy it on Amazon if you'd like. But surprisingly, people took Nelson's book and they were using it and they were misrepresenting IBC. Can you imagine?
What? I don't believe that.
Yeah, they were touting the value of life insurance or whole life insurance, but then they were doing a little bait and switch where maybe they would do an IUL, or maybe they wouldn't design it correctly, because really the design is very key for IBC. So in order to protect the consumer and also protect their brand, the infinite banking concept, they created the Nelson Nash Institute. And part of that is they have a certified practitioners program. And what that means is for any agent, they need to take a course about IBC. They need to take a test about it. They also have a code of ethics on how they're going to design the policy and what products they are going to do. And also, you also have to have a mentor to get you in. You just can't come in and say, hey, I want to take the test. You need to be sponsored by somebody who already is a practitioner, because what they really want to do, they really want to protect the brand of the infinite banking concept and make sure people that are using it correctly.
And how many of these think tanks have you been to over the years, do you think?
I do not know. I went on a streak for a while, probably when I first got in the business, and then, to be honest, I got a little lackadaisical. It's like, do I really need to go all the way to Alabama? I lose a day in flight and payment and travel. But then finally, I realized, I really we're talking about investing in ourselves as the number one asset. And I need to go. And every time I go, there's always nuggets of information that I pick up, and that more than make up for not only the expense of going, but more importantly, the time away from the family.
Yeah, Anthony and I both attended the think tanks over the years, and this year I was actually at another conference that was down in San Diego. But where I was going with that previous question was, I was going to ask you, how many people attended this year, do you think, offhand?
I don't know. I think there was a little less than 300.
Wow. So tell me so you're there 2 days, right? Some of the good information that you got is there's always stuff from on stage, and there's also side conversations with other advisors from around the country that's really good. We've got a couple points here that we've listed, but let's start with the first topic that we discussed. What is one of the maybe presentations or conversations that really stood out to you?
Well, David Stern is Nelson Nash's son-in-law. So he's now one of the directors of the Nelson Nash Institute. And he always each year comes in and shares some sort of presentation. And this one, what he shared was how Nelson had talked about how this should be generational. That this isn't just about you getting a policy for yourself. It's about we need to be able to teach the next generation about money. It's more important than giving them money. It's teaching them about money.
So what is that? That's a great philosophy. What does that actually look like practically? What does that translate into?
Well, what Nelson's talked, even in his book, he talked about where he got his first career. One of his first ones was a forester.
Yep.
And that they have a very long view. If they build a tree, they're not going to be able to cut that down for about another 40 years. So they always need to think long term. So Nelson used that when he's designing these strategies and incorporating this with his family. And what he was doing, or what he's taught in his book, is for you to get a policy on your grandkids. And doing that, and the reason being, because a lot of times, the older generation has more of the wealth, and it might be easier for them to fund a policy for the grandkids. And what his plan was is if the grandkids, the grandparents would continuously buy policies on their grandkids, and then you just continue that. And obviously, when you're just starting out and you are the patriarch of this concept and teaching it, what he had to do is he got policies on himself, and then he got policies on his kids, and he got policies on the grandkids. So it was interesting that what David had shared, well, he shared a few good stories about Nelson, but what David wanted to, so Nelson had policies on David and David's wife, Nelson's daughter, and he had policies on the grandkids. So David took it a step further. He not only had policies on his kids, but he got additional policies on him and his wife. And he had laid it out visually on all of the different policies on each of the different generations. And and I think one thing that we miss, we talk so much about cash value, creating passive income, but we don't talk about more of the big picture. Anybody who's practicing IBC is going to have a death benefit that they're going to pass along to family. And we haven't talked about what that looks like. And one interesting story, about maybe a year or two ago, Nelson called David over and said, David, how much did you have in policy loans? And David at first was concerned, like, oh man, he goes, I have a lot of policy loans. Is he going to be upset? And I won't share the number, but David was very transparent with us, and it was a very large number, and he was expecting Nelson to maybe react negatively, but he didn't. He's like, okay, good. Now, why do you think he would want David to be happy with some large policy loans outstanding?
Nelson thinks long term, right? And so Nelson is thinking generationally. And so if Nelson has policies on him and his wife or that generation, there's got to be a place for that money to go when it is transferred.
Exactly. Bingo. Because Nelson knew that his time was coming, and he wanted to make that each member in his family was going to receive a windfall, and he wanted to make sure that they would have a place to put it. And so David had room inside the multitude of his policies, so he was able to put it to work right away.
So you've talked a lot about kind of Nelson, and this is the first year that Nelson wasn't actually in attendance of the think tank. What was, maybe can you describe kind of the mood or maybe kind of the message that was surrounding this think tank?
Yeah, it was interesting because it wasn't as sad as I expected. In fact, I mean, a lot of people knew that and shared Nelson's faith, and so that he was going to heaven. So nobody was too worried about Nelson himself, but he's more worried about the family, right? But this was actually an exciting time having it without Nelson.
And why do you say that?
Because the reason Nelson, like the infinite banking concept was like his baby, and that's what he wanted his legacy to be, is being able to teach people to create their own banking system. And having this think tank after Nelson's death just showed that this is going to continue to last long past Nelson.
That's pretty cool.
Yeah, that was cool.
Anthony, is there anything else that you might want to share along the lines of kind of Nelson's message?
Yeah, one of the great things about going in there and getting reconnected was really getting back down to the basics.
Okay.
Right. And I remember every time I would ask, when the rare opportunities that we got to see Nelson, I mean, we would always hound him with questions, right? But he would, that first question, he would always answer it with a question. Do you remember what that was?
I do. He would ask, he always asked how many times we've read the book. And what's funny is, now that you bring that up, is I remember that very early on in the early years of our careers, is you and I would always kind of have this competition of going back, track of the number of times that we've read it over the years. And I've actually, unfortunately, I've lost count over the years. So it's been a while.
Mm-hmm. Yeah, he always asks, how many times would you read the book? And the reason why he did that, because I remember the first time I think I told him, I thought I was cool. I'm like, 3 times. Right.
Yeah.
And then,
do you remember what I told him? I told him 4.
No, you probably told him 2. Right? It depends who he asked first. Right. But then the next time I saw him, you know, I knew he was gonna ask that question. I'm like, I'm waiting for it.
Yeah.
And I'm like, 9 times.
Yeah. Yeah. Did you ever cram? Did you ever remember cramming on the airplane? Like when you're flying there and you take the book with you and read through it. Yeah. Add one more.
Yeah.
Yep.
Yeah. Well, and the reason being, because every time I read that book, even now, I still pick up a little new piece of information.
Mm-hmm.
And I think, and I'm to blame as well, when we start talking about IBC, we tend to focus on one piece of that. And that one piece is a life insurance policy.
Yeah.
We're so focused on what company we're going to use, or what somebody talking about what the dividend rates are, or what, or direct or non-direct. It's like so much about the policy, which the policy is a small part.
Mm-hmm.
Really, as Nelson, in fact, you don't need a life insurance policy to become your own banker.
What?
You could do the same thing with a checking or savings account.
Very true. Absolutely.
In fact, we even did a video on that we will put in the show notes, that we did a comparison. Well, what if you're become your own banker using a savings account or checking account, or what if you use a life insurance policy? And we do the math to show you that power of that policy, particularly of that uninterrupted compounding, will more than offset you using really somebody else's bank. Mm-hmm. when you can use your own bank.
That video also always addresses one of the common questions that we get of, why would I want to pay myself interest?
Yeah.
Yeah.
Great video. So I highly encourage you to check it out. And this also reminded me of Nelson's 4 rules. Do you remember his 4 rules?
I do. I'll go over them right now.
Yeah.
Think long term. Don't be afraid to capitalize. Pay yourself interest.
Mm-hmm.
And don't do business with banks.
Some pretty simple rules.
Yeah.
Right?
Thing is, what we've always said is it's simple but not easy.
Mm-hmm. I mean, and just to reiterate, those what was gold for me, to get back to the basics.
Yeah. Awesome. So how about let's go big picture, right? So those were some of the conversations you had. Anything that kind of pertains to the economy, maybe?
One of the best speakers there. I mean, they were all great. So if any of you guys are listening, they were all great. But one that stood out to me, and he does so every year, is Robert Murphy.
Robert Murphy's an economist, right?
Correct. He's an economist. He's also one of the directors of the Nelson Nash Institute.
Okay. And what did he discuss?
He did I remember him. I'm going to even throw back to last year, because last year a lot of us may have heard of this inverted interest rate curve.
Inverted yield curve. Yep.
Yeah. Right. Where the long-term yield is lower than the short-term yield, which has predicted every recession in the last 60 years. He did a really good job last year of explaining really what that is and why it's important. And that actually happened. That inverted yield curve happened in May.
Okay.
So he did a good job explaining why that is important, and what he foresees is going to happen in the future with the economy, particularly even short term this year. The information was so good that we have invited him as a guest. So he'll be on a podcast in a couple episodes. So I don't want to go too deep into that, except you need to listen to it.
Yeah.
Right. A lot of times you might think, well, economist is boring. Robert is probably the least boring economist, particularly if you can get him in a karaoke bar.
Right? I did hear he's a pretty good singer.
He is, actually.
Yeah.
He is. And he is funny.
Is he?
He's funny. I enjoy hearing him speak.
Good. Well, awesome. We look forward to that. We'll have him here in a couple of weeks. And Anthony, thanks for the summary of this think tank. Is there anything else you want to add before we wrap up?
My pleasure to help you out, Cameron. Right? No, what I would say is, if you're listening to this podcast for a while, you should get Nelson's book, Becoming Your Own Banker. And if you have some questions on is IBC for me or not, I don't know, what we'd recommend you do on in the show notes, there'd be a link to schedule a little 15-minute phone call with Cameron or I or somebody on our team, and we're going to be able to get a feeling on whether IBC is something that you should pursue, and if it is, we will give you some resources to help you get that education.
Awesome. We'll be sure to add the link to our video in the show notes as well. Sounds great. Take care.
Make it an awesome day.
Thanks for listening, and be sure to subscribe so you don't miss out on the next episode. Also, check out our website, infinitewealthconsultants.com, to find our podcast along with other additional resources.